Hey everyone, it is Julie here with TipRanks, and today we're taking a look at 3 stocks that are rated unanimous strong buys. So let's get into it. Alright guys, welcome back. Thank you all so much for being here and happy Friday. I hope you're about to kick off a lovely weekend. Today, we're taking a look at 3 stocks that not only have unanimous strong buy ratings from Wall Street analysts, but their price targets would also imply some double-digit upside potential. So we're going to take a look at these companies, what it is that they do, and what those Wall Street analysts are predicting for the stock's future. Don't forget to make sure you've downloaded the TipRanks mobile app so you can stay up to date with all the latest investment news and access your favorite research tools on the go. Links are in the description down below. Now let's jump right into our 3 strong buy stocks. We're kicking things off today with Live Nation Entertainment. They trade under the ticker LYV, currently priced just shy of $100 per share. The stock has seen growth of 47% over the past year, climbing 15% in the last 3 months. Live Nation promotes and operates live music events. They are the largest entertainment company in the world, dominating almost every corner of live events, including concert promotion, ticketing, artist management, and venue operation. Live Nation also merged with Ticketmaster back in 2009, securing their position as the primary ticketing company in the market. The company shared their Q4 earnings report just a few weeks ago on February 22nd. They did come out with a slightly wider than expected loss, but this seems to be the trend for their fourth quarter. Live Nation reported a loss per share of $1.18, which was 15 cents wider than analysts expected. Looking back over the last couple of years, though, we can see every fourth quarter has come out with a slightly wider than expected loss. The company did see solid full-year results, with 2023 having 145 million fans, which was up 20%, and 620 million tickets sold by Ticketmaster. That was up 13%. They said that the demand for live music continues to build, and for the year, revenue grew 36% to $22.7 billion. One analyst from Morgan Stanley recently increased their price target on the stock and weighed in. They said that Live Nation's forecast for double-digit AOI growth in 2024 and beyond enforces the firm's view that there are strong and durable drivers behind consumer demand for live entertainment, and it views the shares as the most attractive way to play these trends. The stock has attracted 13 current analyst ratings, all weighing in with a buy. And that strong buy rating comes with an average price target just shy of $120 per share for an upside potential of over 19%. Looking at the most recent ratings down below, a lot of them in those low 20% upsides. On the low end, we do have one at 7% and a high-end price target with an upside of 27%. Second on our list today is Exact Sciences. They trade under the ticker EXAS and are currently priced just above $60 per share. They did see some climbs into the summer but have been cooling off since, currently down 6% on the year and dropping about 6.8% in the last 3 months. They are a medical tech firm that specializes in developing early testing technology for cancer screening. They are dedicated to improving cancer treatment and prevention through accurate and timely early diagnostic testing. The company has a lineup of test kits for various cancers, particularly colorectal cancer and liver cancer, and backs that up with several tests designed to find predispositions in individual patients' genetics. Exact Sciences shared their Q4 results on February 21st, and their earnings did beat expectations. They reported a narrower loss than expected at 27 cents per share versus the loss of 42 cents that analysts were predicting. The company saw their revenue of $647 million increase 17%. They said they advanced their mission to help eradicate cancer by testing a record number of patients with Cologuard and Oncotype DX in the fourth quarter, leading to strong financial results. While the stock is in the red this year, it seems that analysts think this is a great time to buy the dip. We recently heard from one analyst at Goldman Sachs. He underlines the robust quarterly performance of the company, particularly the growth of their Cologuard franchise, and recognizes the company's continuous momentum and is optimistic about the increased adoption of their services within health systems. He thinks the financial guidance for the year is conservative, suggesting room for positive surprises. He is one of 14 analysts that all currently rate the Exact Sciences stock a buy. Their average price target comes in at $91.75 for an upside potential of 52% from current prices. Looking at our ratings down below, a lot of them in those mid to high double-digit upsides. Our low-end price target actually comes in around 35% here, 32% the very lowest, and a high-end price target of nearly 90%. And our third unanimous strong buy company is Halliburton. Their stock trades under the ticker HAL, currently priced just above $36 per share. Over the past year, they've gained 3.2% overall and have climbed 4% over the last 3 months. Halliburton is one of the world's largest oilfield services company. They provide the expertise needed to operate oil and gas wells, conduct horizontal drilling and fracking operations, maintain fluid pumps and pipelines, and safely decommission and plug non-productive wells. And that's just a glimpse of their extensive responsibilities. Companies like Halliburton help the oil and gas giants face significant challenges in extracting the product from the ground. Their last quarterly report was back near the end of January, and they did come out with an earnings beat. Their next quarter will be coming up on April 16th, where analysts are anticipating earnings of 75 cents per share. This follows their fourth quarter back in January, where they reported earnings per share of 86 cents. The company also had revenue of $5.7 billion and an operating margin of 18%. They noted that 2023 was a great year, with both of their divisions achieving the highest operating margins in over a decade. Looking forward, they said they're excited about 2024 and that the outlook for oilfield services demand remains strong. Following that earnings report, an analyst from TD Cowen weighed in. They suggest that Halliburton is positioned to perform well despite a challenging market, and that their projections for North America in 2024 are more optimistic than the market expected. They said that the deployment of high-margin electric fleets, which are expected to make up over half their fleets by 2025, and strong performance in the Gulf of Mexico work are seen as key drivers for the company's resilience. The Halliburton stock currently has 15 analysts all rating the stock a buy. Their average price target comes in at $47.33, which would be an upside potential of over 31%. Looking at our detailed ratings down below, on the low end, we do have one price target with an upside of 19% and a high-end price target of over 41%, then a lot in that 20 to 30% range. So that is a quick look at 3 stocks, all scoring unanimous strong buy ratings from Wall Street with price targets that have double-digit upside potential. Let me know your thoughts on these 3 companies and which one catches your eye. I always appreciate hearing from you guys in the comments. And of course, keep in mind these videos are never a suggestion to buy or sell any specific stock. Please make sure you always do your own research and due diligence. Don't forget to check out the mobile app using the link in the description down below. Have a fantastic weekend, and I'll see you back here next time.